Okay, well, welcome everyone to today's webinar titled The Exclusive Research Results of the Generative AI in Treasury and Finance Survey. This is Brian from Strategic Treasurer, and we're pleased you could join us as we discuss highlights from this survey. Our speakers for today are Mark Brousseau, Strategic Director at CMLI, and Craig Jeffrey, Founder and Managing Partner of Strategic Treasurer. Welcome, Mark and Craig, and I'll now turn the presentation over to you.
Thanks, Brian. And Mark, it's good to do this webinar with you.
Likewise, Craig, thanks so much for having me. I'm looking forward to this discussion.
I enjoyed catching up with you at Texpo. So I don't know if anybody was at Texpo that's on the webinar today. If you are, type Texpo in the box just so we can see who's been there. So, and thank you everybody for joining. We are delighted that you are here to find out some of the results and the implications from the recent research on AI and Gen AI in Treasury and Finance. But we got a lot of content to cover in 50 minutes. So for those of you who are thinking it's an hour, we're going to be getting you out of here at 50 past the hour, 10 till. So let me go over our agenda and our topics for discussion. We'll cover the survey. We had about 150 respondents to this survey. We'll go over some of the detail on the next slide just for the breakouts. Then we'll look at AI tools, artificial intelligence tools, and familiarity and use. And I want everyone to pay attention to a couple areas. That Treasury is using it in a piloted manner for forecasting, and they plan to use it very heavily. I also want you to pay attention to some of the differences between what bankers are doing in terms of using the technology today for personal and business use, and how corporate treasury and other finance people are using it. There's some differences there that are interesting and bear on how you may want to respond and be more user-oriented towards AI tools. Then we'll look at the future use of AI, and you're going to hear some of the things that you expect, like forecasting is a big issue. You've heard us talk in the past about people spend the most amount of time on forecasting. They would spend more time. Well, they would also and are using AI and would also like to use AI more heavily for forecasting. But there'll be some more information about payments. There's a couple of key areas on payments. We'll also touch on risk because your peers plan to use AI to identify risk, help to manage that risk. Then we'll spend one slide talking about the impact on staffing. What's that going to do? How do I need to prepare? Is that going to impact Treasury staffing more than finance, finance more than Treasury? The expectation is that it'll impact finance more negatively or reduce staff than Treasury. That doesn't necessarily mean that's the case, but there's certainly some efficiencies that will exist and come into there. And then we'll look at generative AI, the uses and how companies are evaluating that. So we'll look at things like counterparty risk, managing exposures, investment options, foreign exchange. We'll also touch base on some of the elements and discussions about what providers are making their systems ready, like banks and fintech providers. Are they adding this type of functionality? Will they add it? How important is that to Treasury professionals? So Treasury professionals will care about that. So too will banks and any providers. And then finally, on the takeaways, Mark and I will wax poetically, or at least talk about what does this mean and what do we do? So we'll give some guidance from what we've seen and what we discussed. And kind of the headline there is, your peers are piloting it and plan to use it heavily. And so we're going to take that as good information and guidance for where we should go. But I'm going to jump into the stats. I want to get Mark involved in the next slide really quickly, but just a couple things. We took this survey, it ran into January, 145 respondents, very heavy North American focus. We didn't have the same level of participation in Europe, Asia Pacific. You see it was very heavily focused. It was a very brief survey. We ran it just over 4 weeks. It was the first survey we did on AI and Gen AI, 24 questions, so it was brief. And you can look at the chart on the bottom right that shows the makeup of companies. It was a little more heavily oriented towards larger companies. You can see 54% were $1 billion and above. But we even had decent participation all the way down to the under 50 million. So it was a pretty good cross section of all different domains. So I'll leave that as it stands, and I'll get Mark in here on familiarity with AI tools. This was really interesting, Mark, I thought, as we looked at the data.
Yeah, it was interesting, and in some ways not terribly surprising. But when we break down what is the level of familiarity with AI between the corporate treasurers and then the providers, and the providers being the banks and the fintechs that we surveyed, what we found is that many providers are more likely to be more familiar with AI and generative AI and even some of the applications for the technology than their corporate brethren. Now, you might be wondering, well, why the devil could that be? You almost have to run and hide to avoid talk about AI these days. But there's some good reasons for this, right? And at its core, well, this is the business of fintechs to be on the cutting edge of technologies, right? And in many fintechs and banks, well, they have teams of people who are dedicated to technologies and things like AI specialties. We also find that providers are, have an innovation culture. Maybe not so much the banks as their fintech friends, but the fact is that today many fintechs and even banks have that culture of innovation, and in many cases, maybe a business wouldn't be as driven for innovation. Of course, fintechs and banks might be more likely to have economies of scale, right? They might be able to spread the cost of experimenting with AI across multiple customers. So this is not terribly surprising. And importantly, Craig, none of this is to suggest that corporates are going to not be able to close that gap very soon, as we'll see in our other data that we're going to share today.
Yeah, great point, Mark. The other factor that's interesting is when we look at actual adoption of technology versus plans. Usually there's a discount. If 50% say they plan to use something in a year, usually it's around 60 or 70%. So let's say 30 to 35% will actually use it within the 2 years or whatever the time frame is. AI, APIs, a couple of those technologies are being used more heavily. And why is, I think, part of to what you were referring to is it can be spread out over more providers. If a vendor does it or if a bank does it, now it's available to 500 companies or 5,000 companies as it's made through as an offer. But the other difference, Mark, too, that it's like, who's more familiar? Providers are like, we're more familiar. Like, we're very familiar, 38% versus 25%. And each of these areas, look at the green and see how that's larger on the provider side than the corporate. And if you look at green and the goldenrod or orange, whatever that color is, you can see that those are also larger on the provider side. And Mark, I'm looking forward to your comments, because what about the actual use? These are the rating your familiarity, and then who's actually using it? There's a flip here.
That's exactly right. What we're finding is that in many cases, it's the corporates who are using AI tools personally compared to their provider brethren. And then when we talk about using it at work, well, of course, the providers are further ahead than the corporates. Now, let's talk for a moment about using AI tools personally. Fact is AI is not new technology. That's one of the biggest misconceptions about artificial intelligence. Chances are you used AI at multiple points during your day today. Did you ask Alexa what the weather was going to be, or what the score of that Sixers game was last night? Well, that's using AI. If you flipped on Netflix and you got a recommendation for a show you should watch based on your past viewing habits, well, that was AI. Did you use some sort of a mapping tool to get to work and avoid the traffic? That was AI. Fact is we're using it every day in our personal lives. Conversely, what we're seeing is that it's been a little slower to adopt AI for work purposes. Although that's changing, we find that providers are a bit more ahead of corporates when it comes to applying AI tools in the workplace. Now, we know from some other finance examples, such as, say, electronic payments, that the consumer trends run a little bit ahead of the business to business trends. So I think we're going to see this gap close very quickly. But I did find it interesting, Craig, that the corporates have embraced AI for personal use, and not as quickly in the workplace. And this really should be great news for fintechs and banks who are going to try to sell these solutions to corporates.
Yeah, it certainly is interesting. There's certainly areas we're learning as we're piloting or playing with things, Chat GPT, Copilot, we use both of those more on a pilot basis than anything else, but it's certainly helping to up awareness. Now, this brings us to our first poll question. We'll pop that on the screen. It's a double stacked poll question. There's notes in the webinar chat, so you can pull those up if you can't see the poll questions. There's the hints there. If you can't see the chat, maybe Alt-Tab until you can find it. If your company blocks chat boxes or poll quizzes, I don't think we can help you with that, but there you go. The first poll question is, I am using AI tools personally, yes or no? Just select one. It's a single choice option. And the second question is, I am using AI tools for business. Yes, I'm piloting or experimenting. Yes, for real work. Just pick, if you're using it for real work and maybe you're experimenting to pick real work, and then no for the other. Those are the options. And then you hit the submit button. While that's coming on, we're going to say if we have 150 people type CMLI for Cash Management Leadership Institute in the chat box, we'll send all the results from our poll questions to you with the document. So go ahead and do that. And then we'll put up some links to CMLI and Strategic Treasury. We'd love you to follow those organizations. So Cash Management Leadership Institute, there's a website. You can see they have a number of great articles, and you can follow them on LinkedIn. And so we won't make it much of a commercial, but we just wanted to make sure you are aware of what they do throughout today's webinar. And they also underwrote this survey, so we're quite appreciative of their desire to stay on top of what's new, what's exciting, what people are paying attention to. So, Mark, I don't know that it's surprising. The numbers are higher here, but these are everybody who's self-selected into AI and webinar. So it's 73 and 27%. So
presumably they know what they're getting into here.
Yeah. And then on the business side,
this is surprising.
Yeah.
I'm intrigued here. What we found in a recent CMLI survey is that about a quarter of all finance departments are currently using artificial intelligence for AP or AR, and that actually seems about in line with our results. And it's interesting. We're seeing a lot of folks at least piloting the technology. One of the things I think we need to be mindful of as Treasury leaders is that we don't get stuck in that pilot mode. It's not uncommon for big businesses to pilot a technology and then they never really roll it out. And then they wonder why they never achieve the full results of the technology. So while I applaud the 26% of our attendees who are currently experimenting with AI, I would impress upon you to make sure that your organization has clear objectives and a clear timeline for when it is you plan to roll out the technology. Then as part of that, well, you have to make sure that you set measures to understand exactly what it is that's delivering. And only your organization can determine what it is those success KPIs are. For the 57% of you that aren't currently using AI, well, hopefully by the end of this webinar, you're going to be encouraged to begin your own pilot program.
Excellent. Thanks everybody for taking the poll question, for answering that and submitting it. I find that interesting to get that immediate results. So You can see how many people are using it. What's expected? Massive growth is expected among those who are currently using AI. So, on the corporate side, how do you expect your AI use to change in the next 12 months? 83% expand, 16% same level, 1% would reduce. Okay, that's pretty, that's very Pac-Man like, right? The green is everybody's going to expand. There's going to be some that keep it the same. On the provider side, still hyper positive, just not quite as positive. So reduce AI use 4%, right? That's somewhat notable. Continue using is the exact same 16%, or about 1 in 6, and slightly lower percentage, 80%, plan to expand the use. Still hyper favorable in all categories. And Mark, as we look at this, is anticipated. What are the expectations of use that we should be looking at?
Yeah, and what your survey found is that 50% of corporates are currently experimenting with AI tools for work, and a slightly smaller percentage are planning to use it for personal use. And this is really very interesting to me. What we're seeing is that at a time when businesses are challenged with trying to do more with less, manage a challenging labor market, and navigate what could potentially be uncertain economy, they're embracing AI as a possible way to do that. And Treasury, this is really an ideal tool, right? I mean, AI at its core provides us with the type of data analysis and insights that we need at times like this. We know that Treasury departments deal with vast amounts of data. And right at this moment, somebody in a C-suite is trying to figure out, where do we stand with our cash flows? Where are we with our corporate spending? Where are the risks? Because we don't know what's about to happen with the economy. And this is tailor-made for AI. What's more, it also helps us with risk mitigation. And we know that risk is at an all-time high. The shift to electronic payments has created some new challenges for organizations in mitigating their fraud risks. We're being inundated with phony bank account change requests. We're seeing that fraudsters are becoming more sophisticated. And AI helps us identify those anomalies that might indicate fraud. And that's critical. And finally, I think the other thing I'm hearing from lots of treasurers, Craig, is that AI is a valuable tool for them to help manage the ever-increasing regulatory burden that they're facing. It helps ensure that processes and policies are being followed by identifying those outliers that could indicate non-compliance. Providers, no surprise, they're going to continue to embrace AI and continue to experiment with it, both personally and professionally. What did you make of these results, Craig?
One thing that you just said about compliance, when you first said that, I was like, are we really doing that for FBAR? And then I was immediately driven back to, that's exactly right. I was at a customer advisory board for a technology company that we use their technology quite heavily. And one of the things that they're developing AI was on compliance. Like, what are our contracts? When do they due? Mm-hmm. Do you have these security features on these accounts? And the ability to set this tech off against your data and your systems to ensure compliance is like, it's like an army. It's like an army of analysts, or a legion of interns that you can set off for a minuscule portion of the cost, that does a better job. It doesn't do a perfect job, but it does a better job about going through things. And then with someone guiding, it makes a difference. So I think I'm extremely bullish on the use of AI and finding value in a number of these use cases. So I'm very much in agreement with you on that. What do you think about another poll question? How about that?
Oh man, I was hoping you'd say that.
And just in time. So the first one is, my view on AI is that there is much hype, some hype, much promise, some promise. This is multiple choice. If you're schizophrenic, you can select all of them. If you have, you might select, it should only be maybe one of the top two and one of the bottom two, but we're not going to, we can't enforce that through this tool. And then our company's preparation or use of AI is, we're a leader, we're in the top 10%. I just made that term up. We're a follower, 11 to 30%, so the second, 20%, and then we're in the middle, basically from 30 to 60%. And then we're in the bottom, we're going to be a laggard, we're the final 40%. So the last I saw on the chat box, we had needed 18 more CMLI. I see that there's some that have come through different channels.
There we go.
We'll get over the top and then we won't have to hype it up. But so select all that apply on the top, and then in number 2, select the one that most closely aligns with what you think your company's fit is. And we are over the 150 people typing CMLI. So we have done it. So don't type it in anymore. Just think it in your head.
Greg, I'm curious. You've been in the industry a while, like I have. Can you remember a technology that has generated as much excitement as well as much trepidation as AI?
I'm not sure about both. As much excitement, I think so. When we talked about EBAM, the amount of people that were excited about that was pretty high. And then it's like, oh yeah, all our records are on paper. And then we're not going to do that as much. On the trepidation, I don't know if it was technology, but I remember FBAR coming out, how many people got very excited about that, and a couple other compliance areas. But those two together, I don't think so.
Yeah, it's been fascinating, and I wasn't trying to put my thumb on the scale around hype, but there's certainly it is a lot of hype around AI. I blame it all, by the way, on the 1980s movie Terminator, right? It led us to believe that AI in the form of Skynet could wipe out the human race. I think that's really part of this. The fear around AI is that this is going to eradicate humans, but I digress.
Come with me if you want to forecast.
Precisely.
I love sci-fi, even the stuff that gets a little dark there, right? So all those fans of Sarah Connor, that's awesome. Yeah. Those people that don't know what we're talking about, the movie's been out so long, it's not considered ruining it if it's been, the first movie's been out for 20 years. So there's more hype, some hype. That's 66%. Much promise and some promise. Look at much promise is number 1. And there's always going to be some hype, but that much promise, I'm very much in agreement with. There's quite a bit of promise here in different areas. It's not going to solve everything, but in a short order, in several years, I think the impact's going to be probably bigger than any of the other technologies that have come out in the business domain. It took Excel a lot longer to make an impact. I think that's a big deal. Look at this. This is funny because look at this. The leader is almost 10%. It's 13%. So of this population, there's 10% would be leaders, and 13% selected that. The 11 to 30 is 20%, and almost exactly 20% selected that. The middle is 40%, and right, isn't that 40? Yeah. No, it's a little bit more. That's so that's 30%. So a little bit more heavily weighted on the middle, and then the bottom 40%, a little bit lower. So self-selecting, it's self-selecting themselves into this webinar on the tech front. I would expect it to be a little bit above average, and this group appears to be above average, kind of like Lake Wobegon. All the children are above average. Everyone that's come to a topic on this, that looks good.
Yeah.
Well, thank you for answering the poll question. And Brian, if you would pop up the CMLI newsletter link in the chat box, feel free, everybody, to go ahead and subscribe. It's free. It's fun. And I know Mark will be happy if you do that. Let's keep Mark happy. But yes, why don't you start us off on the corporate use of AI here?
Yeah, and I was happy to see that you all agree about the potential promise of AI. Hype cycles aside, I'm pretty confident that over the next several years, AI will not eradicate the human race, but it might just wipe out the things we don't like about our jobs. And when we think about Treasury, well, the fact is that we're burdened with manual, repetitive tasks that just hold us back from the kinds of things we were hired to do, right? You probably spend your day wrangling spreadsheets and toggling between systems and dealing with endless phone calls from folks verifying the authenticity of data. Well, AI can help us eliminate a lot of those manual tasks, and it does it in some really compelling use cases. And first, and in my mind, foremost among them is cash forecasting. I think AI is tailor-made for cash forecasting. I mean, think about it. AI-powered systems are going to aggregate data from all those sources that we spend time, in many cases, manually logging into and pulling down reports, whether that's a bank statement or a transaction record, or even those invoices and payment records. And what it can do is it can even integrate data in multiple formats. And then once it has all the data, well, now it can go ahead, it can analyze it to identify patterns and seasonality and even correlations between multiple variables. And once it does that, well, now it can do some predictive modeling for you. It can provide us with some more accurate forecasts. And once the time has elapsed and it sees how it did, well, it uses what we call machine learning to then adjust. It learns from its mistakes and automatically bakes that into the cake for the next time it creates a cash forecast for you. And this is powerful technology, and it provides you with real-time updates. So as you go along and your time is elapsing against that forecast, now it can adjust it as, say, maybe some of the data sources change, or maybe even market conditions. So there's going to be a big announcement coming up about interest rates. What impact does that have on the market? Well, those could be reflected in your cash forecast in real time. And you can also, of course, use the same type of tools for scenario planning. In terms of fraud, well, we know that fraud is a big issue for businesses these days. CFOs tell me all the time it's one of the things that's keeping them up at night in many cases, more so than the economy. And AI is ideal for helping us mitigate fraud. It can go ahead and analyze vast amounts of data, and it can identify those outlying transactions that could possibly indicate fraud and probably bear some sort of review. So for instance, if Craig typically sends me one invoice per month, and this month I've suddenly received 6 from him, well, AI can flag that and have someone take a look and understand what's happening here. Not only velocity of invoices, but say the amount of those invoices. The invoices I receive from Craig are typically for $100,000, and this month his invoice turns out to be for $1 million. Well, AI can automatically detect that. Now you might be saying to yourself, well, come on, Mark. I've got Gladys who's worked in my AP department for 30 years. She catches that. Well, the fact is she might be off. She might retire. She might leave for another job. And we can't be dependent on human judgment to catch all those things, because as much as we love Gladys, she might have a bad day. Something might slip through the cracks. Well, AI never has a bad day. It's not perfect, but it certainly is not as prone as some of the other manual tasks that we rely on. Interestingly, AI can also do what we call network analysis. It can automatically determine the relationships between different transactions and different trading partners. So then it can start to turn up different relationships that could potentially indicate fraud. Last but not least, AI is already being used in many cases for payment and settlement processing. In many cases, finance systems are already using AI to help ease our reconciliation burden You're probably spending lots of time manually reconciling those bank statements. AI can do that for you automatically. It could also do some decisioning on payments to help us determine what's the most optimal way to pay a supplier based on things such as their preferences or the timing of the payment or even the costs involved. So, Craig, when I look at things like cash forecasting and fraud mitigation and payment and settlement processing, the use cases in Treasury are really compelling, and they're already starting to be proven out.
Yeah, excellent commentary there, Mark. When you talked about the cash flow forecasting, there was two things. I don't know if everybody picked up on it or not. One was you described it's great at looking at data, historical flows, being able to model those, which I think everyone gets. You also mentioned the other idea that there might be some independent variables that have a causation or an impact to the other ones. And we think about that with regression analysis. What are the independent variables? Heat on the day or number of stores you have selling ice cream, all those heat's high and you have more stores, that's going to drive up ice cream sales, or there should be some correlation there. And to the ability to cycle through other data that may be in your company or maybe external, like you said, interest rates, changes. Those are some areas where well-directed treasuries will really be able to go to the next level. A lot more treasuries will be able to do that. It's a very small number that do all of those things together. So I really appreciate your comment on that. I just want to challenge everybody to think about the future state of what could be there. But there's a number of challenges here that AI looks to address, Mark.
Yeah, and of course, cash forecasting accuracy is one of them. We asked folks what specific areas or challenges do you expect AI to address in Treasury and Finance? And cash forecasting accuracy was the one that corporates seem to be most excited about. And let's be honest, many of us are relying on Excel spreadsheets to do a lion's share of our forecasting. Perhaps we have Treasury workstations that aren't able to aggregate all of our data automatically. And perhaps we have multiple subsidiaries, each with their own ERPs and forecasting tools. Well, AI is able to aggregate all those data sources and do it in real time and be able to give us real-time analysis of what's happening. Reconciliation, well, that's another one that corporates are excited about. And I agree. This is already being used by a number of payment processing vendors, both on the AP and the AR side. And of course, the aggregation and normalization of data. Providers are taking the lead here because they understand that this helps their solutions deliver more value. And for banks in the audience, well, this is a great way to get around some of those manual integration and manual uploads that you've had to deal with in the past several years. This is what your peers are telling us they're most excited about with AI, and this presumably will be the short-term priority list for the technology.
Yeah, excellent. So this is good stuff, right? We think of reconciliation. We've had tools for a long time that match on date ranges, amounts, content that's included. Then you build in some tolerances, and then you can have it learn from what's being done. You can build in additional logic. So there's a number of areas that may not be as exciting on Treasury, but touch finance and help with fraud detection or fraud discovery if there's some kind of reconciling item, for example, and that's just one of several. Now, I know there's a question about, we do have another polling question come up. Someone had asked about that. I'm just taking that and answering that verbally. So I'll start off on this one. So what is the impact on AI on staffing, right? The whole, was it Skynet, is that going to end the human race or not, might be some question, but what's the impact on AI on staffing? Let's look at the left and the right first. So increased staffing levels, 7% of people think that will be the case in Treasury. And the same percentage in finance, other areas besides Treasury. We have a lot of Treasury people who take our surveys and respond to our research. So that's a fairly small, about 1 in 14 think more staff. Why would that be the case? Well, there's much analysis to be done, much risk management to be done, much value in improving forecasting and reducing fraud, leveraging these tools to help the core responsibility of being a steward. So this 7% think that this will help increase staffing levels. If you go to the right side, decrease, Treasury, 23% say we think that the net impact is it'll decrease staff levels in Treasury, and 42% or 19% more think that will happen in finance and non-Treasury areas. And I wanted to maybe have a little dialogue and hear what you think on this, but the idea is in Treasury, most Treasury groups are pretty thinly staffed. They haven't had armies of people entering, AP activity for accounts payable or posting huge numbers of complex, annoying, terribly written, information about what's being paid for. So on the Cash App side, there's an army of 12 people that you can reduce if you automate it. So I kind of wonder about on the Treasury side, it's usually thinly staffed, and there's a whole bunch of things on the side of the desk that aren't being done that have great value, but they haven't hired it. I think that's one of the most thinly populated areas in finance. So I think that may be high, but these are the numbers. So there's a difference in what came out. I'd love to hear just your thoughts on this data and then the situation at large.
Yeah, I think you're on the right track, Craig. I think this is going to be all about freeing up staff to focus on the fulfilling higher order activities that always get pushed to the corner of the desk, to use your analogy, right? Things like analyzing data and collaborating with stakeholders across the organization, or even EGADs, building relationships with customers and suppliers, right? This is the kind of stuff we don't have time to do in Treasury. Why? Because we're too busy trying to manually pull down reports from different sources and have them feed into our forecasts and our models. I thought the tell in this data set was all the way to the right. When we look at decreased staffing levels, to me, that 42% that say they're going to decrease staffing levels in non-Treasury, that's the manual tasks that we're spending time with in our finance departments. Those aren't the analysis tasks that treasurers are really counted on to do themselves. So I think what we're going to see is a refocusing of our staff, not necessarily a reduction of our staff in Treasury.
Great points. I'm going to bring up the next poll question. And while that comes up, maybe we can answer some of the comments. So this is another double stacked poll question for your reading and responding pleasure. My desire to stay on top of current developments in AI for Treasury is extremely high to extremely low or non-existent. And then the second one is AI and Gen AI will change the Treasury profession more in the next 5 years than in any previous 20-year period. So any other tech or any other change. So we're saying it's going to be more than to answer true, that would be more than a 4x impact of AI and Gen AI. If it's about the same, you put the middle, the probably. If it's not, you put false. So we have enough answers in the chat box. Mark, there was a question that's kind of screaming past my screen. I don't know if I can get to it. One was, I love the engagement, but it's hard to keep it track of. Do you think this will impact the offshoring functions that have been so popular over the years?
I do, and I think we're already seeing it. So a few things of macro trends have occurred all at the same time. The labor arbitrage to some countries to which we were setting up financial shared services centers aren't necessarily as compelling today as they were, say, 8 or 9 years ago. At the same time, we're also hearing that the turnover in a lot of those offshore facilities is rather high. And that has created more opportunities for errors. And so quality has become a bigger and bigger issue. And meantime, well, now we have tools like RPA and AI to eliminate a lot of the manual tasks. And the fact is we weren't sending strategic tasks overseas. We were sending manual repetitive tasks. Those are ideal for a shared services center. And so now I think you're going to see, Craig, a shift, perhaps not bringing everything back onshore or maybe even near shore, but I think you're going to see more of a focus on using AI and RPA to a lesser degree to help do some of the tasks that we were initially sending offshore.
And I think that's right. The whole if we can eliminate something, we eliminate it. If we can arbitrage it by moving overseas and paying a quarter of the rate, that makes sense. And if we can automate that, that's better than any of those things, or it's better than any of the arbitrage.
Exactly.
So. All right, so we have, and there's some other good questions. I don't know that we'll be able to get to it. AI development impact, extremely high, high, and moderate. So you're in a webinar on this topic. That makes perfect sense. And true is that it'll probably impact 67%.
Two-thirds.
Two-thirds think it'll be a 4x impact of anything else. I have to agree with that.
I agree.
I think, I don't know if we just have this bias because we had people who talked about it or wanted to come on a webinar, but at least we all agree with each other. So that's fun stuff. All right, now we're gonna accelerate as we come through the end. I'll just cover this one, next couple, and then Mark, you'll take the generative AI solutions. But a couple things on this one. Where are corporations expected to use Gen AI? We talked about forecasting, but here you can see some of the elements. Identify risk and evaluate exposures. Like, what are our risks and exposures? How do we manage those? Like, how do we evaluate those in the elements or the area of like counterparty risk using public information? Half of you think, a little over half of you think, this can be good as a way of gathering additional counterparty information. That makes perfect sense. 40%, which also makes sense of how can we evaluate FX exposures and recommend actions. There are tools that are out there that are evaluating FX exposures, recommending options, showing different options and the cost of those to do that coverage. And while not every organization has significant FX exposures, it's pretty high. So that's a key area. And then investment options. I think this one's going to be higher. We're already seeing that in play with some providers. That's going to grow. And that's going to give us more options. Mm-hmm. As we shift over to generative AI solutions, who's prepared or unprepared to offer those? So fully prepared was 16%, so about 1 in 6. Partially prepared, 29%, almost double that amount. So, 1 in 3 almost, or 3 out of 10. And then 5 out of 9 or 55% are not at all prepared. That's for providers, technology firms. So this, if you're a provider, look at this and see your customers don't think very many of you are prepared. And this is going to be a transformative area. This will make a difference in whether your organization stays current, gains share, or becomes obsolete. That's very likely. Banks, 92% said they're only partially or not at all prepared. So that means that blue section for banks is 8%. It's half of what tech providers are looking at. So, and I know there's a big difference between some of the largest banks, the banks that are funding tech and looking at AI versus other ones. So this is going to be an area of divergence in providers and the banks over the coming years. And I'd love to talk with you about this more, Mark, but I think I have to turn this over to you on the Gen AI solutions.
Yeah, and so really, what you want to do is there's a couple of key considerations when you're evaluating prospective solution providers. And the first on this list is in my mind the most important, and that is data security and privacy. Hey, fact is that AI depends on data. Lots of data. So you need to be sure that prospective solutions comply with your data security and privacy requirements. Evaluate each vendor's security measures, what types of encryption technology they're using, and how it is that they go about handling data from clients like you. Second, look at that cost of implementation. You really want to be focused on what I call the total cost of implementation for each solution. Don't get distracted by some of the license fees and some of the other things. You want to understand all of the costs, not some of them. You need to make sure that you get a clear picture of the total cost. And finally, I do want you to think about integration, right, with your existing systems. You need to be able to pull data from all of your data sources. So understand the lay of the land that a prospective vendor would need to be integrating with so they have a complete picture. And finally, scalability. This is not throwaway technology. Make sure you understand what a prospective vendor's ability is to scale with your Treasury department's changing requirements. You want to make sure this is foundational. Craig, I think if you focus on those four, you'll be in a good position to get the maximum return on your investment.
You and the majority of those who responded too. So you're in very good company there. Excellent. So what do we do about this? This is one of the things that we promised to have a conversation at the end. What did we learn? What should we be doing or thinking? So Mark, if you'd kick us off.
Yeah, so what you want to do is you've taken the first step today. You've come to learn about AI and some of the potential use cases. Now, assess where in your operations there might be some good opportunities to employ the technology and start a pilot. Look for consensus among some stakeholders and experiment with the technology. Cash forecasting, well, Craig and I think that that's a logical place to be able to use tools like AI. We think that it can provide you with tremendous value. You want to make sure that you focus on data security and privacy. There's still a lot to be written about what's going to happen with ethical considerations, but one thing that you can control today is ensuring that AI complies with how it is your business wants to go about managing its sensitive information. Remember, as Treasury leaders, we are gatekeepers for our organizations. We are the first line of defense against fraud and financial malfeasance. Additionally, you want to go ahead and take a hard look at those use cases. We gave you a couple today, but assess your operations. And I always recommend that before you ever call any vendor for any reason, you understand what it is you're trying to achieve. So go ahead and gather up your frontline staff, get stakeholders together, understand what the boss expects out of Treasury, and then identify some of those use cases and get to work. Because as the data from strategic treasurers clearly shows, if you don't get going on AI soon, your business runs the risk of falling behind its peers in Treasury.
Yeah, and individually too, right? If we're not keeping current, we're not attending webinars like this or participating in research, we become unaware. And time matters. You know, a day may not matter, but staying current is certainly important. How else can we stay current and important? I want to jump back over. Thank you everyone for listening. We do have a couple more things to say. Thank you, Mark. Thank you, CMLI, for underwriting this research. And there's a way to get the report. I'll invite Brian back in.
Thank you, Craig. Thank you, Mark. And thank you, everyone, for joining us today. The CTP and FP&A credits, today's webinar slides, and a recording of today's webinar will be sent to you within 5 business days. And be sure to download the Generative AI in Treasury and Finance Survey report by clicking the link in the chat box. Thank you, and we hope you have a good rest of the day.